Why do most investors just stop at one property? It's not because they are unmotivated. It's definitely not because they're bad with money. And 100% it's not because they're not trying. It's really because the second and third properties become exponentially harder in the current environment. Unless you know how to game the system the right way, the truth is clear. Without a clear strategy, you're not building a multi-property portfolio. You're just going to have that one investment only. And I'm going to teach you how to expand. Hi everyone, my name is Nick. I'm a director here at Handle Properties. We are a boutique buyers agency helping Aussies invest into quality real estate in that 400K and up range. But most importantly, when you work with us, you only work with us. There are no junior agents that we pawn you off to, no fluff. You work directly with myself and AJ. We're both former investment bankers and hedge fund managers. And before we turned 32, we'd already built personal portfolios more than $5 million each in property, all while working full-time jobs and on single incomes. We understand the numbers better than most, but we also understand how to use them in the current market to get real-world results. We're not talking about strategies that worked pre-COVID or when the lending rules were relaxed. So let's get into it. Why do most people stop at just the one property? Now, let's not sugarcoat it. The main reason is borrowing power, or more specifically, the lack of disposable income to increase your borrowing capacity over time. When you buy that first investment property, your debt goes up and your serviceability drops. And unless you're in a growing industry where you know your income is growing faster than your repayments, you're going to be stuck. And that's the trap. And if you don't plan for it, that one property might be the only one you ever own. But here's what most people get wrong. It is possible to build a large property portfolio with modest income. And we've helped plenty of clients earning less than $150K a year build 2 or even 3 property portfolios. We're going to be realistic. You're not going to get to 10, 15, 20 properties on that income, but you're definitely going to get to more than one. They didn't win the lottery. They didn't get massive pay rises. What we did for them was work the system. And that system is all about timing. Specifically, timing your purchases around growth cycles. Over the last 100 years, the Australian property market has averaged 6.8% capital growth per annum. Now that's really solid. It means that properties double almost every 10 years. But here's the thing, averages don't build quality portfolios quickly. The reality is you don't need 6.8% growth every year. You need 1 or 2 or 3 big years early to unlock your next move and then pick up that average growth rate. So let's break it down. Say you buy a $500,000 property today and it grows at that average of approximately 7% a year, which is about $35,000 in equity in the first year. Now that's pretty nice, but it's not game changing. Now imagine instead you bought in a tightly held market, somewhere where rents are surging, listings are falling, vacancy rates are really low, and infrastructure from the government and private enterprises is starting to kick off. That same 500K property could grow by 10 or 15% in the first year alone and the year after that. That's approximately 50 to 75K in equity in the first 12 months. And this is not hypothetical numbers. We've had clients experience this in places like Perth, in Adelaide, pockets of North Queensland, and parts of Brisbane. This is also data that we have done in the last 12 months alone. So thinking July 24 to now, where clients have achieved this result. This early equity creation is key in your property journey, because instead of waiting 6 to 8 years for that steady growth to accumulate, you're unlocking usable equity in 12 to 24 months. And that equity, when combined with a solid debt strategy and structure, you can fund your next deposit and your next costs and take that next leap. You're no longer purely relying on savings from your job. You're recycling equity quickly, and the trick to compounding faster, and that's the trick to compounding faster than the average property investor. It's all about front loading that growth, pulling out that equity quickly and reinvesting it. This is how you go from one property to many properties, even on average incomes. It's about strategy, sequencing, and timing. Owning one investment property, That's really hard, and that's already better than most. But the clients we work with, they want more. We work with really ambitious professionals. They want to build wealth. They want those options, and they want that freedom for themselves and their family in the future. They're not trying to beat the system. They're just trying to use it properly, and that's what we help them do. So if you're stuck at just that one property or looking to get on the property ladder but build more than a one property portfolio, here's what we would recommend. Start by watching the other videos on our channel. There's heaps of free education on our channel and others out there, and we definitely recommend you start there, use it, learn it, and build on it. But when you're done and you need a done-for-you solution, come and speak to us. We help those busy professionals that are just so busy in their day jobs, in their family life. It's just so challenging to put together a plan for their property portfolio and beyond. Come to us, and that's where we'll help you find, finance, and secure your next investment property. Go to our website, click on Start Investing, and book a call with us. Let's have a chat. And of course, if we're the right fit, we would love to work with you personally, and we'll help you go beyond just that one property. Looking forward to see you in the next one.